There's no question what you're supposed to do. If I get a 5-minute buy program, I'm supposed to take some profit either at my middle Bollinger from my 2-hour chart or my short-term moving average. And we have other strategies too. All of our exit strategies are clearly defined. All of our entry strategies are clearly defined. So this is how we do it. If in fact I see this, and this is one of the patterns that we'll teach you. This is a Japanese candlestick pattern called a doji. And what a doji means is that the bears and the bulls are fighting at this level. We know this level to be important because of my 2-hour chart. If in fact I start to get some selling off this, I'm ready for it. Okay? All I need for me is start taking out lows with increasing volume. Now you can see what happens here once that pattern starts to work. This increasing volume, okay? You can see the increase, all of a sudden the increasing red, and I'm taking out bar lows. These are entry points for us, okay? These are entry points for us. Because now what's my bias on my 5-minute? Now it equals that of my longer term charts. When all of our time frames are in the same bias, that's when you sort of hit a home run. It's a great little trade. Remember, we're risking a bar to catch the trend. And in this scenario, we would be selling this bar right here because we have decreasing, increasing red here. My bias is negative, so I'm not looking for buys up here because we're talking about an important level on our longer term charts, but I'm looking for sales. It's very important. Of course, we'll teach this, and not only that, but I'll be with you all day long in our trading room. Okay? So what we do is we use this as our information bar. Once we take this low out, on this bar we sell 138.01s, and our risk is the top of this bar. 138.10s, so we'd be risking 11s. So our risk is 10 points. Now, as long as we get increasing volume, we get the characteristics of a down channel, which mean making new lows, lower highs, and increasing down volume, which we get. Now, what does that mean to us? Well, we're talking about 138.01s. You can see the situation as it tries to retrace. You can see it trying to rally on decreasing volume. This is very important to us. This would be a continuation pattern. After the retracement's done, then the trend starts to kick in again. Remember that 138.01. We have a low here of 137.51. That's 50 pips in the euro currency, about $625. Okay? That's what we teach. Our information off the longer term charts is very important to us. Now, everyone likes the S&Ps. Let's take a look at the S&Ps, which are now closing on the highs of the day. Now, check this out. Now, you remember you heard me talk about this already. I'll blow this up. What does a change pattern look like? You see these blue little triangles? These are called pennants. It's something else that we teach. Pennants are a sign of indecision for the market. I can't take out the previous bar high or the previous bar low. It's inside that bar. That is very important to me. Okay, that is very important to me because it gives me an idea, especially if the pennants are on tops and bottoms of moves, on whether this is a continuation pattern or whether, in fact, we see change. Okay, this is the low of the day here in the S&Ps, this price right here. This is the low of the day. And are you telling me that this Nautilus system catches this change pretty much at the low of the day? Decreasing green, red, increasing green. The sellers are losing steam, and the bulls are starting to take over. Okay? So right here it's like, could this be my one? Because remember we talked about a channel. Every one or every up channel always starts with increasing volume. The key to it is when it tries to sell off, after we believe we have a 1, as it tries to sell off, is this a 0.3 strategy up, which would be confirmation of our new change pattern? So this would be it. This would be our point 1. Why? This will teach you. I know it's new to you guys. Okay? This is our point 2. This is what we teach. We have a whole library. We have 8 chapters. And this is my point 3. The point 3 strategy is what does it for us. Okay? It tells me that the little sell-off, is just retracement. Why? Because it's decreasing volume. So if I take this high out, with increasing volume, I now have an up channel. And all of our channels are confirmed with volume. Because other people just draw lines from lows to highs, and I'll draw from here to here. We don't. We teach that every channel we draw is always confirmed with volume. Every point 1 must have increasing volume. Every point 3 must have increasing volume. So in this situation, we are risking a bar, okay, to catch a trend. If we're wrong, I lose a bar. In this case, on this bar, we pay 170.5, 1 tick above this high, and we risk 1 tick below this. And you can see what happens. 170.5. Now, okay, we're getting a question right now. Okay, the question comes to me before you started to interrupt, but I thought entry had to be decreasing red into increasing black. Increasing black, and I'll show you, increasing black means that we have increasing volume opposite of the trend. It's not trading above our moving average. That's why it's black. If we had increasing volume and it traded above my red bar or my red line, that would be green. Black is still important to me. Increasing black is still a change of what would have been the downtrend. Okay? In this case, this would be increasing up volume, whether it's green or black, and it's confirmed with a point 3. Every point 3 must have increasing volume. Now, there are different scenarios. Sometimes it might take another bar to have the increasing volume. But what happens here is it gets us, the Nautilus system gets you long at 170.5. And now we start our trend. As long as we stay with above my middle Bollinger, that's important to me. And all of a sudden you say, hey, I see the black volume here. This black volume. Now, the reason why we have black volume is because this is increasing volume against this uptrend. Okay? Against this uptrend. But at the end of this increasing black volume, what does it tell us? You can see as it's trying to sell off, it's selling off on decreasing volume, which tells me that this is just a retracement in our trend. And then once we take this bar high out, the trend will continue with increasing volume. Remember this right here. We only move our stop once. Okay? When we get 2 to 1 on our profit, we go to break even. But once we start to get this increasing green volume taking highs out, now we believe that we're into something special. Okay? We risk a bar to catch a trend. Okay? Now, it's all about change and continuation. Change and continuation. It looks like we had a little bit of change pattern here. These are the 75 halves. And these 75 halves, this actually was a profit-taking level. Why? Because at the time, this is our short-term moving average. Now blow our chart up. This level, when the market rallied, we took profit at the 75 half level. Okay? This is a partial profit area. The second partial and final partial, you'll be taking profit right now. Right now at 1179 even in the S&Ps. Why? This is one of our strategies. Could go higher. God bless it. I hope it does. But for us, the middle Bollinger is very important to us. We use our longer-term charts to take profit. Right? 79 even, 79 quarter. This is one of the ways we use to take profit. Like I said, we have well-defined exit strategies. We have well-defined entry strategies. What we'll teach you is we'll teach you what a volume change pattern looks like and what a continuation pattern looks like. You see on this one, I'll blow this up a little bit. You can see how he had the increasing and then the decreasing black with increasing. These are continuation up patterns. Uh-oh, I see a black pattern. I'm a little bit nervous now because every change pattern has to have increasing volume. So I say, okay, I wonder, is this a change pattern maybe to the downside? The next bar is important to me. Decreasing volume. If I take that bar high out with increasing volume, continuation patterns. Continuation patterns. It's our ability to stay with this trend is the key. We don't like to trade 10, 15 times a day. Okay, we're not trying to localize this trade. I'm not getting in for 200 and then taking a $100 hit 200. We're trying to stay with the trend for as long as possible. Okay, I'm not just picking this market out because it's there. Let's look at the Canadian dollar today. Canadian dollar is under pressure all day today. But at the low of the day, uh-oh, look what it shows us. This increasing black bar is important to me because now I have really good increasing volume against this trend. And it's a bullish engulfing. So now I get a little bit of a volume change pattern. And I can mask it with a Japanese candlestick bottoming pattern. We'll teach you all the candlestick reads you'll need to know. Okay? We'll teach you these. And now if I take out this black bar with increasing green, guess what? We've got ourselves a channel here. Increasing, decreasing, increasing. This is a 3-bar pattern of a change. Now what do we need for change? We need to start taking out highs, and at some point we need the increasing volume. This is a home run trade here for the Canada. Remember our strategy for bullish engulfings, just like it was bearish engulfings? Take the body. This body is 61 to 67. 6 ticks. Cut that in half. 3. Okay, we're taking off 3 off the high. So that means I'm buying 64s, and I'm risking a little low on this bar, 59s. It's a $50 risk. Let's see if we get it. Next bar trades down to 62. Remember, we're 64 bid. And we start to see the increasing volume. And as long as it stays above my middle Bollinger, and even better yet, as long as it stays in front of my short-term moving average, life's good. Uh-oh, black volume. I don't see any green volume yet. And the reason why is we don't have increasing volume to come out of this. But why would I get out right here? Why would I take profit right here? I'm not sure what happens right here, but why would I sell it right here? Are you telling me that we were able to buy it here and we're going to take this all the way to right here? This is what makes the Nautilus trading system very special. 2-hour chart, right? 2-hour chart. What are we trying to do? This is where the bullish engulfing started here for the Canadian. And we're supposed to get out at our short-term mover, which is right here at the 09 level that we talked about. Even though it's trading a little bit above it right now, that was the play. You're supposed to get out in front of your 2-hour short-term moving average in this case. So if I blow this 5-minute candle up, I say, are you telling me that your bullish engulfing, your volume change pattern, coupled with a Japanese candlestick bottoming pattern, gets us in here, which it does. And are you telling me I'm able to take it right here? Yeah, because of what we use our longer-term charts for. We use our longer-term charts to get out of the trades. Nice trade.